And welcome back to the Market Wolf. I am the Market Wolf. Please like, share, and subscribe most definitely. If you enjoy the content you are about to see, if you're returning, I beg you to please hit that like button. It helps the algorithms, keeps me going here because I know my audience will grow and this is actually worth my while. So, that said, I want to start with the VIX today because we didn't get the volatility yesterday. Totally forgot it. Wrote about it in the comments section of my last video. If you haven't checked that out, go check it out. You can see volatility coming down. That's what I was basically going to say yesterday, is that we're going to cool off, and we have. And we could cool off a little more, but that's roughly dependent on what's going to happen, which I'm about to speak about when it comes to the S&P 500, VU, Tesla, and some of our other big market movers. Now, if you take a look at the VIX here, you can see we are respecting our larger thesis, which is we are coiling up inside this symmetrical triangle, and we have not broken that yet. And this makes perfect sense because the markets are largely bearish overall. Volatility is probably going to stay in the mix for a while until things begin to settle down. We really haven't even begun to see a major move down yet, although many people think this is bad. It can get worse. So, let's take a look at, let me go right to Tesla first and then to VU. Tesla, similar pattern to the S&P 500. We had that brief rise up yesterday, then we traded sideways today. And you will see the exact same thing with VU. Had that rise up, and then we kind of came up, traded sideways. Basically, these larger market players are moving similarly to the S&P 500, and I want to take you to the 30 minutes so you can clearly see that that is the same type of action we had today. And this is the Market Wolf, where I give you the best bear case, the best bull case, and then I give you my opinion. And so you can see we had that rise up and sideways, very much like everything else that we've seen, although Tesla was a lot flatter. But you can see they were all also basically on the 30 minutes supported by the 20. Don't make me a liar. Yes, we were. And yes, we were. Right? Now, we see on Tesla, we've had this bullish divergence begin. We see on VU that we have had a slight bullish divergence begin. And if we look on the S&P 500, you can see we've had a slight bullish divergence begin with these EMA lines. And people, if you don't know, a bullish divergence means that is bullish. That is a good thing. That means that the market could go up. Now, it doesn't necessarily mean that it will. You've got to hear the rest of what the analysis is and put the pieces together and think about it. So, what I'm going to do for you is I'm going to give you the best bear case first. The best bear case for tomorrow is that we continue down. We begin to go down. You can see this pattern. We've got some wicking up here. You can see volume's been falling off. It wasn't a great trading day. It was mostly sideways with volume beginning to fall off. It looks like we could be having a momentum reversal. We may trade a little bit sideways, some more and down before going down completely in any type of waterfall situation. But I would say that we would at least make it down to 405.32, maybe have a wick through like over here. And then the most bearish I would be is that we have a long ride down to about 401.26. We may even wick through there. So that's about as bearish as I would be on tomorrow. Although that is if the Fed only announces, that last hour could be crazy. So if the Fed announces more than a 0.50 rate hike, we could be in some trouble. So let's look at that while we look at the biggest bear case so we can be thinking about that. And just the market in general. From Investopedia, U.S. equity markets lost ground this week with the S&P 500 notching its fourth consecutive weekly loss on disappointing earnings reports, particularly from tech giants such as Apple and Amazon. For the week, the Dow fell 2.5%, the S&P 500 shed 3.3%, while the NASDAQ declined another 3.9%. The three major indices declined in April, with monthly losses of 4.9% for the Dow, 8.8% for the S&P 500, and 13.3% for the NASDAQ. It was the worst month for the tech-heavy NASDAQ since 2008. The 10-year U.S. Treasury note yield ended the week nearly unchanged at 2.94%. So, basically, not good. Markets are being affected by this aggressive tightening. The Federal Reserve is seemingly committed to stopping this surging inflation with a hike of 50 basis points. Now, this is what the market is expecting. However, they have been talking about front loading. I have heard from other sources that we could be looking at a 0.75% this time, and you can see the market is anticipating not a 0.75 rate hike, but the market has been anticipating, a 0.25 to 0.50 hike. Now, we've had the former Fed chair on the air in mainstream media, one of the former Fed chairs, speaking to the fact that, we're going to be going into a recession. That's a big deal because the former Fed chair is more free to speak. So, if that's the case, they may try and get the pain over with quickly, and they might front load it. They have talked about that. We could see a 0.75 hike tomorrow. If we see a 0.75 hike and things do not go well in that press conference after the initial statement at 2 p.m., so 2 p.m. and 2:30 p.m. are the key times to watch, then I think the situation is going to be dire. I think we crack that 40126. And look, on the SPX, they're saying 4,000. A lot of market analysts are saying if we crack below 4,000, that's it. That's basically where the market has priced in, where we think we're going to go. And this could be really bad if we crack that area. So overall, very bearish all over the place. And they say, well, yeah, that's when you're supposed to buy, right? Well, maybe. We'll look at that when we look at the bull case. But if we get that 0.75 hike, then I would expect you could crack below the 40126 here and head down to these other levels. If you crack that level, you could have a significant drop. I want to take you over to the weekly on that just so you can see how significant of an event that would be, since this is the bearish case, the bearest of the bears, the most bearish case. You see, we cracked through there. There's not much. There's a gap to fill, actually. So it would make sense if we cracked all the way down, or if we had a quick wick through and then came back up in the most bearish case to deal with that. But there's not a lot here. You don't get to serious accumulation again until 39390. So that might be, in the most absolutely extreme bearish case, that might be where we stop. Okay, so basically this area is where you want to be looking for the most extreme bear case, especially if they go 0.75, right? That last hour could be really, really gruesome. Now, I want you to also notice momentum on the weekly is against us, really, and that the volume coming in is not substantial. And I want to take you out to the month too, so you can understand where I'm about to go with this most bearish case. You have to understand that we are, look at this. I mean, just remember, look at the size of this engulfing candle. It's enormous, right? And we haven't recovered much yet. And we're going into Wednesday tomorrow, and it's already questionable with the Fed meeting. So keep that in mind. Let's go back to the 30-minute. I want to give you the bull case now, the most bullish case I can give you for the S&P 500, VU, Tesla, and all of your other major stocks, okay? So, the most bullish case we have here for tomorrow is that, we begin to see more volume coming in. We need good volume to begin to lift out of this area. And, you could, technically speaking, you could possibly come up and complete this cup. Although it's not looking great. It tried, but it really looks like a failure. We're getting pressed down, but it's hard to make a bull case right now. But we could. I want to show you the 2 hour, okay? we have a better case there for this, even though we're on a little bit of a downtrend. You can see this almost looks like kind of a bullish pennant here, if you wanted to look at it that way. And we have room to run up. And, we haven't completely coiled over yet on momentum. It could rise up, and we could get volume coming in. So it's a possibility. It's a definite possibility. I think the most bullish we could possibly be on tomorrow before the Fed speaks is we may crack through. Let me take you to the 30-minute. We may crack through this price. We may build a better handle here, flag out some tomorrow, come up, and then perhaps crack through this huge area of what I would consider resistance, honestly. I mean, there's a lot here to get through. And then perhaps we start another cup up here. So, we could be working on a very big cup and handle for the bullish case. It's questionable right now. We could cool off on the 30 and give us room to run as this flags out. That's certainly possible for the bull case. Also, the Fed, we don't know what they're going to say. For all we know, they could come out tomorrow and say, we're not going to do any interest rate hikes. I don't think that's the case. I think they know they need to stop inflation. Plus, some of the things that are happening in the world order are not going to plan for many of the Western elites. So I think they know they have to get inflation under control. They have to float America. They have to fix the economy somehow. So this is important, and it's possible that they only come out with a 0.25 interest rate hike, and then the market perhaps priced that in, and we get up here and we start completing a cup. I think that's the most bullish I could be for tomorrow, is breaking above this channel and beginning to put on a handle for a new cup there. Now, what's my opinion? This is going to be important here because it's a little bit of a mix of the two things, but this is basically what I'm thinking tomorrow. I'm thinking tomorrow that we continue to see price decline. We have a lot of wicking here. Volume hasn't been stellar. All I can do is look at what's in front of me. I want to take you to the 2 hours so this maybe looks a little bit clearer and you can understand what I'm saying here. Though we do have that bullish divergence, I think it's probably a fake out. And even though we have room to run and momentum is certainly kind of in our direction on the 2 hour, we can't ignore the volume profile. We can't ignore the fact that, we're on a little bit of a downtrend here. To me, this looks like we're trying to put in a W for a potential reversal, okay, or a failed reversal. This is what it's kind of looking like to me right now. Remember, I talked about that yesterday. So I think we're going to continue down tomorrow. I suspect we could go to 406.95 tomorrow, and we could certainly go lower. We could see this come all the way down. I think for me, personally, I could definitely see us coming down to 403.37 or 401.26 and touching that at the very least. I really think that's a definite possibility because of the Fed speaking tomorrow, because of the release. Honestly, you look at today's trading day. I mean, you just look at it, you think about the monthly and the weekly. Look, and we're inside this channel, this downward channel, and price though has been moving it's been moving sideways. It's also kind of down, moving down, and just not looking great overall for us. And maybe there's going to be a massive tear face off day tomorrow. I'm going to be absolutely wrong. And after the Fed comes out, we'll only have made it down to about where we were, and which would be 405, about there, 3.2. And then we just put in a W all the way up to here, completed, and then we really take off and we rip. That could be, over the coming week. That's a possibility. But what I'm looking at right now, all the news that I'm hearing, everything seems to be saying, even the technicals, not just the news, is that we are headed for pain. We are headed for pain and to be ready. So that's what I'm seeing. That's what I'm thinking. Remember, I could be wrong. If you have any questions, let me know. Leave comments. Let me know what you think. That is the bear case. That is the bull case. I will see you tomorrow on the Market Wolf.